Investing can absolutely seem daunting at times, and it can require a considerable amount of work to get your portfolio just right. However, what if I told you there's an easy mode? Hold on to your seatbelts, folks. This is going to be a good one. In all honesty, investing can feel overwhelming at times, especially when you try to pick individual companies. There's so many to choose from, and each can promise growth or dividends, or, of course, usually it's a combination of both. There are potential winners and, of course, potential losers. New investors are often at a loss to figure out which are which, and that can be very discouraging if you make the wrong choices. Then, if you think that's difficult enough, let's throw in diversification, which can definitely add another layer of complexity. It is completely true that investing does come with quite the learning curve, but there is an easy mode, and that, my friends, is the world of exchange-traded funds, or ETFs for short. Investing in ETFs allows you to tap into entire markets and sectors without the hassle of stock picking. It is like you are choosing a huge basket of stocks without stressing over any one single stock, and in addition to that, you're also getting instant diversification.
What exactly are ETFs, and just how do they work?
Instead of buying shares of just one company, ETFs will spread your investment dollars across dozens or even hundreds of them, reducing your risk big time. This can give you exposure to entire sectors or even the entire stock market in just one easy step. There, of course, is a fee involved for this convenience, and you will hear about management fees and management expense ratios. These tend to be very small, and for the most part, invisible to you as they are removed from the fund's returns on the back end. Their expertise is worth it as far as I'm concerned. They're the ones that do all of the muss and fuss as to which companies are staying in the basket and maybe which companies are getting the boot if they're not performing. A sub to the channel is the best way to invest in future content, and that is fee-free. What I want to do with you guys today is build a basic blue chip ETF portfolio. Before we do that though, what exactly is a blue chip ETF? So a blue chip stock or company represents a well-established, financially sound company that has demonstrated consistent performance over the long term. Blue chip ETFs, well, they take it a step further. They bundle together all of those dependable industry-leading companies like Royal Bank, Canadian National Railway, or even Enbridge into one easy investment option. Blue chip ETFs are the choice of investors who want steady returns and low risk. For good reason. They offer a combination of strong growth potential, reliable dividend payments, and, well, fewer headaches compared to trying to build your own blue chip portfolio from scratch. In putting together this portfolio, let's start with the S&P 500. This is our exposure to the big US companies, and seeing that the US is the biggest economy in the world, this is absolutely a staple ETF for sure in a blue chip portfolio. For the S&P 500, we chose the Vanguard S&P 500 Index ETF with a ticker of VFV. This ETF is an absolute staple when it comes to blue chip ETFs for sure. At the time of recording, their price was coming in at $141.88. They have an NAV of $140.88. Their assets under management, pretty big, 17.41 billion, and their beta is coming in at 0.95. So that puts them very close to the market average in terms of volatility, which would be basically a score of 1.00. Their return on equity, that's coming in at 29.32%. Looking at the fees, these are really, really low. Their management fees, 0.08%. Management expense ratio, 0.09%. As I said, these are really low fees, and you gotta love that. Switching over to dividends, they have a yield of 1.028%. It's a quarterly dividend of 35.7 cents per share. When it comes to returns on their 3-year return on investment, that comes in at 36.55%. Factor in the dividends, we do get a total return of 40.40%. Switching to their 1 year, that return on investment comes in at 34.42%. and a total return of 35.80%. Now, VFV, they actually hold 506 stocks in their fund, And their top 3 holdings include Apple, Microsoft, and NVIDIA. All right, let's move north of the border and take a look at a great ETF that invests in our flagship market, the TSX. For the TSX, we chose the iShares S&P TSX 60 Index ETF with a ticker of XIU. This ETF is a great way to gain exposure to the biggest Canadian companies. At the time of recording, their price was coming in at $36.77. Their NAV, $36.66. Their assets under management, $14.05 billion. Their beta, 1.00, so they're exactly as volatile as the market average. That return on equity, that's coming in at 13.47%. On to the fees, management fee of 0.15%. Management expense ratio, 0.18%. Switching to dividends, they have a yield of 2.794%. Quarterly dividend of 26.6 cents per share. Looking at their returns, on that 3-year return on investment, that comes in at 11.80%. Factor in the dividends, we do get a total return of 20.61%. On their 1-year return on investment, that comes in at 22.32%. Total return, 25.75%. One thing that you will notice today is most of these 1-year returns are going to be higher than the 3-year returns. And that is because, well, we had a bear market in there, and that sort of skewed some of them numbers down a little bit. XIU holds 63 stocks in their fund, and their top 3 holdings include Royal Bank, TD Bank, and Shopify. We have US exposure and Canadian exposure. Maybe we should add in a little international exposure in the form of an all-equity ETF. We will stick with iShares as we have the iShares Core Equity ETF with a ticker of XEQT. This ETF provides additional exposure to North America, but it adds a good amount of international exposure, including those emerging markets. Their price at the time of recording comes in at $32.90. Their NAV comes in at $32.72. Assets under management, $4.85 billion. And their beta, once again, we got another 1.00. This is kind of cool. That return on equity, 20.37%. When it comes to fees, their management fee is at 0.18% and their management expense ratio, 0.20%. Looking at their dividends, they have a yield of 1.849%. It's a quarterly dividend of 9.4 cents per share. Switching to their returns, on their 3-year return on investment, that comes in at 18.22%. Factor in the dividends, we get a total return of 24.11%. On their 1-year, that return on investment, 26.49%. Add in the dividends, total return 28.80%. XEQT is a little bit different than most of them in today's list as they hold, well, 4 other iShares ETFs that combined have 8,904 holdings. Their top 3 holdings, though, are Apple, NVIDIA, and Microsoft. So the 3 ETFs we've already looked at, they provide a very broad exposure to the markets. You can also focus down. And for more Canadian exposure, you may want to consider 2 of our biggest sectors, which include banking and energy. Let's start with the energy sector. For energy, we are once again sticking with iShares and the iShares S&P TSX Capped Energy ETF, which has a ticker of XEG. This is a great ETF for exposure to the Canadian energy sector. At the time of recording, their share price was coming in at $17.27. Their NAV, $17.43. Their assets under management, $1.42 billion. They have a beta slightly less volatile than the market average at 0.93. Their return on equity, nice looking 28.89%. This is one of the higher fees of the day. Their management fee comes in at 0.55%. Management expense ratio, 0.60%. Looking at their dividend, they have a yield of 3.06%. That's a quarterly dividend of 14.5 cents per share. For the 3-year, their return on investment comes in at 69.31%. Factor in the dividends, we get a total return of 85.59%. Holy banana bread, that's pretty good. Looking at their 1-year, oh boy, their return on investment is only 0.88%. Factor in the dividends, total return of 3.97%. Now that goes to reflect that oil and gas has seen a little bit of hard times lately, but those numbers will of course pick up once oil and gas picks up. XEG does have 31 holdings, and their top 3 holdings are Canadian Natural Resources, Suncor, and Cenovus. Okay, let's jump into that banking sector and perhaps bank on some more exposure. Believe it or not, we do not have another iShares ETF for this one. We instead have the BMO Equal Weight Banks Index ETF with a ticker of ZEB. This one basically holds an equal weighting of the big Canadian banks. Their price at time of recording, $40.84. Their NAV, exact same, $40.84. Their assets under management come in at $2.91 billion, and their beta slightly more volatile than the market average at 1.06. That return on equity, 15.46%. When it comes to fee, their management fee comes in at 0.25%. Management exchange ratio 0.28%. Looking at their dividends, their yield is a little higher than everybody on the list today, 4.114%. It's a monthly dividend of 14 cents per share. Looking at their returns on the 3-year, that return on investment comes in at 6.66%. Factor in the dividends, we get a total return of 19.04%. On their 1-year return on investment, that comes in at 32.25%. Sprinkle in some dividends, we get a total return of 37.69%. That's not too shabby. ZEB has 6 holdings, which may not come as a surprise as we have a big 6 banks. So their top 3 holdings currently are Bank of Montreal, National Bank, and CIBC. These 5 ETFs are some great ones to gain an initial exposure. You can easily expand to gain even more exposure to other sectors or even investment products like fixed assets or commodities. If you are even more adventurous, there are even more ETFs out there for almost anything that you can think of. Well, except a banana bread ETF, they have yet to make one of those. These are just the starting points, and we will be back with more easy mode videos in the future for sure. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Well, let's continue that learning journey. Check out this video on XEQT. Thank you for watching, and I will see you in the next video.